Well, Kingsview Asset Management CIO Scott Martin joining me now. Scott, you look at all the stocks that are kind of indicators of where the economy is going. That's what Walmart is. That's what Lowe's is. That's what Target is. These were, as we were saying in the last hour, these were the safe stocks compared to the NASDAQ stocks, the fly-by-nights, and they're down 25%. Are we looking square in the face of a recession here?
Yeah, the recession's here, David. I think you're right. And I love what you're talking about with Lauren there previous, because you're right. I mean, you look at Amazon, too. I'd throw that in there, David, as a retail bellwether, consumer staple name to some degree for many of us. And I think the recession's here. We had negative GDP growth in Q1, and I think Q2 is going to be right there with it. That's why, too, I think the markets, David, as we parse things out in the last couple months, why they've been so negatively reactive to so-so data. You know, they started seeing through, I think, a lot of the data and realizing recession was here or coming. So the good news, though, is that the sooner we get through this, the sooner we're going to get out of it. And I know that's not much consolation for many of us who are holding stocks today that are down, but the sooner that we can kind of get through this malaise, the sooner that these falls or drops happen, the sooner the markets can recover and go up. It's just hard to get through at times.
It's a strange recession. And again, so was 2009. Yeah. So we've had some recent history of strange recessions. But one thing that's so strange is we have such a surplus of jobs. Usually recessions and lowering job numbers go hand in hand. In this case, we still have that overhang of 11 million unfilled jobs. Are those going to dry up pretty quickly if we're smack in the middle of a recession?
Some will, but it doesn't matter if they do, because you've got 2 jobs for every 1 person that's looking for a job, so they have some room to do that. I think it's a great call by you to say it's a strange recession. We should almost write a song with that title, right? And you'll be on vocals, of course, and me on keys. Because here's the thing. I mean, I don't want to sing in front of anybody ever again. But here's the thing. You're right, David. That also probably means, though, that this recession, because I believe it's here, will be short and sweet in the sense of we're not going to see that crazy real estate fallout we saw in 2009, the crazy drop that we saw in 2001. We had the tech crash, terrorist attacks. We had a big jobs recession back then, too. So this could be a short and shallow one. But the key aspect behind this, the man or woman, if you will, behind the curtain, is Treasury Secretary Janet Yellen and Fed Chairman Jerome Powell, because they're raising interest rates, David, into a recession now pretty precipitously. So how does that shake out with respect to negative GDP growth 2 quarters in a row? And we've got, what, about 200 basis points in hikes coming down the pike from the Fed.
You know, that's not the only thing they're raising. They're also raising the number of regulations we have to deal with, particularly in the energy industry.
Taxes.
And that's causing more inflation. That is to say, all of the pressures that are causing inflation are just increasing, the policy pressures. So I don't think we're going to end the inflation thing anytime soon. The recession may be short-lived because of the economy coming back online after the pandemic, but the inflation is going to remain with us and stubbornly really kind of put a cap on growth. Don't you agree?
I agree to some degree, I guess I could say. I mean, I think the inflation picture, though, is starting to peak out a bit. We're still high, but we're starting to slow that rate of growth. Well, I think we're starting to slow the rate of growth, David. I mean, we were going up like this, and now
forgive me for interrupting, but look at the wholesale prices, which are precede the retail price increases. We're in double digits on wholesale prices.
Sure, and that's true, David, but it's also a reflection of the fact that we have supply chain issues that are starting to get worked out slowly but surely, and likely coming as a reflection of slower demand because of the recession that's here or coming. So that will help hopefully relieve some pressure on prices. But still, to that point about where inflation is going forward, how companies are trying to pass it along. We saw Target comment on that as well. It's really impacting that tried and true consumer that's been holding us up all through, say, the pandemic.
Yeah. And part of the other craziness of this recession, if we're in it already, is the fact that you have so few houses. So even though recessions really hurt the housing market, and it may hurt this time as well, because we have such a dearth of product, of inventory in housing, that may be secure, particularly if it's a short-lived recession. But it's interesting. You're the second market analyst we've had on who said it's virtually 100% sure that we've got a recession coming. So it's not good news, but we're going to have to learn to live with it. Good to see you, Scott.
Sooner the better. We'll get out a bit quicker. See you, David.
Thank you. Scott Martin, my friend. Thank you. Well, a quick alert.